today for this bit of a feature on Mendel Helium is, of course, the CEO, Nick Tulloch. Nick, thank you for your time. How are you?
I'm very well. Good morning, Mark. How are you today?
Yeah, very good, thank you. So I'm looking forward to diving a little bit more detail into the whole project you have over in Kansas. Maybe just to start us off, just perhaps introduce Mendel Helium to us and a bit of a high-level overview.
Yeah, of course. So Mendel Helium is Aquis listed. We've recently announced that we are examining the right market to be on, and we are preparing to consider a move to AIM. Mm-hmm. The company is a British company, but based in terms of operations entirely in Kansas. And the clue is in the name. Our interest is helium. Helium is an element that's been known to the human race for quite some time, but it's only really in the last 10 years people have started exploring, particularly for helium. Until more recently, it's been a byproduct from other gases or other exploration. And our objective in Southwest Kansas is to develop wells that are productive for helium. One of our big advantages is that Kansas is very well known for gas. The top end of the Hugoton gas field sits in Kansas, so the infrastructure is absolutely terrific, meaning that very often we can just tap into a gathering system, or if not, it's a very, very short truck journey to a gathering point. But do you want me to talk more about the helium market?
Well, I do want to talk a bit about helium. I want to understand. So, as I understand that helium, it can't be synthesized, can it? So it can only come from, the ground, naturally occurring helium. So there's a finite supply of that, and we can see there the uses of helium. But what's the kind of market dynamics like? I mean, is it lumpy like lithium? Is it volatile like another commodity, or is it stable? I mean, how can we compare it to another commodity?
I think the best way to describe the market is it's very immature. It's okay. As I mentioned, it's only really in the last few years that people have started exploring for helium as a target element. And what you said at the start is absolutely right. Helium has no natural substitute for those industries, and I guess you can see in the pie chart, those industries that have a requirement for helium, there isn't anything that is an obvious substitute. I mean, if you take sort of lifting gas, for example, I mean, those of us who watched the film many years ago, the Hindenburg disaster, hydrogen is not necessarily a suitable alternative. And the same is true in the electronics and the space and the defense industries. So the wonderful thing about helium is that it has a very a clear series of defined uses, and there isn't anything else that could step in. And we've seen that in pricing. So over the last 5 or 6 years, helium pricing has absolutely surged. Now it's starting to level off to an extent, and the reason it's leveling off is supply and demand. I mean, as a race, human beings are fairly smart, and when there's something in demand, we go and look for more of it. And until recently, helium, as I say, it's been a byproduct of other production. Now people are going, as we are, going definitively out to find helium. That's increased the supply of the gas, and we're seeing a bit of a leveling off of pricing. I don't say that as a bad thing at all. And going back to my first comment about the market being very immature, you could line up 10 helium producers, and they'll give you 10 different prices that they're getting from their supply from their customers. Pricing is very much about where the demand is, and I think we're very fortunate to be in Kansas, where we have one of the world's biggest helium producers, literally just a few miles from our wells. This is the Jayhawk site that's owned by Scout Energy, meaning that our delivery of our raw gas to that site is incredibly straightforward, and sometimes it's as simple as just connecting to the gathering system. So we're a beneficiary of strong pricing. If you're in an area where you're a whole lot more remote, and remote can sometimes be measured in tens of miles. If you're trucking quite a large quantity of gas to a production facility, you're probably trucking quite a lot of waste. I mean, our best helium well has 5.1% helium. And if you just take that as a benchmark, therefore 95% of what we take out of the ground is waste. You don't want to truck 95% waste anyway. So location and access to infrastructure is absolutely critical in helium, which is why I say you'll get huge divergence of pricing based on how quickly and how easily people can get helium to market. And the caption in the photo is true. I mean, anyone who's bought a helium balloon from a fair or a children's birthday party, you know as soon as you let it go, it's gone. So it's quite a hard commodity to hold. You can't just sort of heap it in a pile as you might do with coal or iron ore. It has to be contained at all times and eventually has to be purified.
So when you talk about the location, and are we talking here about jurisdictions where helium's more in demand, which I would assume, although I could be wrong, it would be more you would call developed countries, because I can see there that, for example, MRI takes up quite a lot. I don't know whether that's in the operation of the MRI machines or in the manufacture, but you're going to find more of them in the United States, for example, or more sort of Western developed countries. Also things like the engineering, all these things look like they're more from a developed country. So are you saying it depends? We're talking here about the jurisdiction of where the demand is versus sort of where the supply is. You're not going to truck it halfway across the world because you wouldn't make any money. So is that what we're talking about here when it comes to like location?
Yeah, to an extent. I think you could say the same many commodities. There is probably more use of commodities in developed and industrialized nations than perhaps in other countries. And helium is no exception. And if you look at the bigger uses of electronics, space, defense, medical use, there is going to be a dominance in those parts of in those industries to more developed nations. And coming back to what I said previously about ease of transport, yes, you can contain helium in a cylinder, a big cylinder, a small cylinder. You can transport it. Again, my silly example of a children's fair. The helium got there somehow, and it probably got there in a pressurized cylinder. So it is transportable, but transport costs money, and it's a challenging element to transport. It has to be contained, it has to be pressurized, and so the further you're sending it, and the less pure form you're sending it, has a very significant cost. Again, like any commodity, what you want to do is purify it as much as you can on site, and then send it the shortest possible distance. I would say helium is absolutely in that category, but maybe a little bit more so just because of the difficulty of containment. You can't just bring it out of the ground and leave it sitting there ready for collection. It's got to be contained literally as it's coming out of the well, and ideally purified or delivered to a gathering point instantaneously.
And where in the world are we seeing the majority of helium production?
The big producers are the US for sure. Russia is also a big producer, but is obviously under sanctions. I always think you have to be quite cautious about where you say helium exists. Helium is the second most abundant element in the universe. So it wouldn't be beyond the realms of possibility that you and I could drill in our back gardens and get traces of helium. Probably not commercial. Before everyone starts digging in their back garden to find what they've got, probably not commercial. But helium does feature in most of what we do and see. But it's invisible. It's inert. You're not going to smell it. And as I say, if you let it into the atmosphere, it will rise up. So it's a fairly abundant element. But the bigger producers have tended to be those two countries to date, anyway.
Okay, that's interesting. How you actually find it then? What is it? Seismic testing? How do you know you've actually got? Obviously that we'll talk about the Hugoton field in a moment. How do you discover it?
So helium under the ground is generally formed by radioactive decay, which again, I don't want everyone to think they're sort of sitting on some sort of nuclear disaster, but over thousands of millions of years, helium will be formed through a natural chemical process. You could also theoretically take it out of the air and purify it. The cost of that would be totally prohibitive, but helium exists all around us, so it would be possible theoretically to do that. To my knowledge, no one has tried to do that on a commercial basis, and generally it is found in other gaseous wells. So most people, when they're producing helium, will talk about content of methane, content of nitrogen, carbon dioxide, other well-known gases. And generally speaking, the helium will be a very small percentage. I mentioned our best well at 5.1%. Many of our wells are at 0.6%. But even at 0.6%, given the value of this gas, we can make a well extremely economic at that level.
Okay, that's interesting. So you got they're economic at about 5 or so, and the rest is just waste, literally waste. What other gases would be contained?
Well, I suppose it depends on your view of waste. So in our well in near Fort Dodge or near Dodge City, the Rost well, that well is predominantly nitrogen, and at the moment we have no particular use for the nitrogen. Yeah, so that is essentially a waste product. There's a small amount of methane that we're looking at perhaps trying to capture and use topically to run a generator to produce Bitcoin. But yeah, otherwise that methane would be a waste product we need to be disposed of. Over in the Hugoton, where we operate, slightly different. Those wells are producing all of the above gases, also some NGLs as well. Now we can send everything we produce, everything that comes out of the ground, we can send into the gathering system that then goes to the Jayhawk processing facility. So long as we don't put water into the system, we can send everything else down that pipe. And we will earn money from methane, we'll earn money from NGLs. There's nothing to be earned from carbon dioxide or nitrogen, for example. But some of the waste product might have a small value. But to put it in context, even at 0.6% helium, where we are in the Hugoton, over 80% of the value of what we take out of the ground will be represented by helium. Anything we'll get from methane or NGLs is a relatively small proportion of the value of that well.
Okay. Well, let's have a look sort of where you are then. So Kansas, right in the middle of the United States, well known for its farmland, and I think corn as well, growing corn and wheat.
If you like corn or you like beef, it's a great place to be. I mean, it's beautifully flat. I mean, the joke, the expectation about Kansas, totally true. It is a almost perfectly flat landscape. I mean, coming from, Scotland, where I live, very alien countryside, and you can just see cornfields for miles and miles. But for if you're in the oil and gas business, wonderfully straight roads, good wide roads, well maintained. Nice weather conditions. I mean, it gets a little bit cold in sort of January and February months, but otherwise very operate. And plenty of corn and plenty of beef.
Let's have a look a little bit more. This is on Google Maps. So, of course, this is zoomed out in the United States. So we've got Kansas, we've got Dodge City, which is, I know, where you're located in one of your areas. And Garden City, talking about the Hugoton area first. So Garden City is around here. So just explain to us, I think the Hugoton field runs from Garden City sort of down around this sort of area. Is that right?
It does. I mean, the Hugoton extends from Kansas through Oklahoma and into Texas. And for a European, it looks like a backwards map of Italy. It's sort of boot-shaped. And there you go, sort of facing in the wrong direction. Where we are, we're up in Kansas. We're at the top end of the Hugoton, but the same geological structure runs all the way through into Texas. This is a field that was discovered some 90 years ago. It's been very well prospected, very well drilled, but remains highly productive. If I go back, I talked about the Jayhawk facility that Scout run. That produces around about 4% of the world's helium. And that's coming out of gas wells that are probably only about 0.6% helium. So that gives you an idea of just the volume of gas that is produced, even in the Kansas part of the Hugoton on a daily or an annual basis.
So this has been. Let's just talk about this field. The Hugoton gas field is huge. Obviously, it spreads down into Texas there, so it's a huge field. And I mean, you're in this area here. This is your license area. I know we'll talk about those blocks in a moment, but one thing that's pretty obvious is all these circles, which I guess are crop circles, irrigation circles, I suppose they are.
Or the aliens have landed, one or the other. It's farmland. As you drive through Kansas, it is bar the towns you go through, almost exclusively farmland. And in amongst that farmland, you will regularly see off the highway, sort of classic nodding donkey wells.
Right.
The wells are, I mean, there's a huge number of them clearly across the Hugoton, but they sit in the farmland. So you'll take out a section of the corn, build your pad, drill your well, put your facilities on that pad, and all around you've got cornfields.
So effectively, I mean, I know we did that video from site, and you were stood and it was just surrounded by corn. So is that how it works? Effectively, you sort of license a portion of that land to the landowner, and they basically don't farm it, and you can do your thing, basically extracting the gas.
It's exactly that. There's a well understood structure where the landowner gets a royalty.
Right.
So land and mineral rights are split, and if you're the mineral right owner, you will pay a royalty to the landowner. So generally speaking, and we've never had any issues. Generally speaking, landowners are absolutely delighted. When someone like us comes along and says, guess what, guys, we want to drill a well on your land.
Right.
Great news for them. If we mow down the corn, which invariably we will, in order to build the pad or build any access, essentially you've bought the corn. So
Okay.
if, for example, we're connecting one of our wells to the gathering system, that's a sort of a meter deep trench, that will sort of run, from well to gathering point. You'll mow down the corn to drill the trench, to dig the trench, and you've bought the corn. So whatever the prevailing price of corn is, and that's whether it's knee high or ready to be ready to harvest, you've bought the corn. But otherwise, the landowner gets a royalty on what we produce.
I see. Okay. And I mean, it is prolific, isn't it? I mean, if we look here, this is what you sent me before. I mean, the red, you can explain it, but it's effectively that is the Hugoton area, and your area is down by Nielsen 1, I think. And all the red is effectively what's been drilled or operating wells.
Yeah, I mean, this is kind of sort of a perfect illustration of how the top end of the Hugoton looks. I mean, if you sort of think back to that boot picture, this is the sort of the knee-high part of the boot, and you can see that the Hugoton has been, terrifically well prospected over the years. And although this is obviously quite zoomed out, if you're on the ground, you'd be seen as you drove through. I mean, if you drove from our Peyton well to our Smith well, by all these yellow circles, these are our wells. If you drove from Peyton to Smith, you'd be seeing a gas well, every few hundred yards. It's a very prolific area. What we've tried to do is be a little bit more imaginative. And although interior wells in the Hugoton are very productive, I mean, you've drilled a dry hole in the Hugoton, that'd be front page news. What we've tried to do is be a little bit more creative and drill to the edges where pressure is higher, meaning flow rates should be higher. You do get a little bit more water. So where we are in Nilsen, for example, which is one of the best producing wells in the Hugoton, it's doing about 124 MCF a day. Where we are in Nilsen, there is water to take off. And what we've proved is that once you remove that water, you do get those higher flow rates. And we call that area the transition zone, where you're sort of right on the edge of the Hugoton, sort of coming out of the sort of central part of that gas field.
So when you call it a transition zone, that's transition from the gas zone to a non-gas zone.
Yes, yeah. So the Hugoton has got several geological structures which are productive for gas. They don't run parallel to the surface. So over to the left of the map we're looking at, we get into Colorado. As you get through Colorado, you get the Rocky Mountains, which obviously an enormous structure. So the Rockies sort of pull all the geology upwards from the nearby areas. So the geological structures in Kansas run essentially sort of west to east. So the further east you go, you've got to drill a little bit deeper to get to the gas stones.
Right. Okay.
As you go deeper, you may or may not hit the water table. So the reason we talk about the transition zone being slightly wet is it's still the same gas zone that exists within the Hugoton, but as you go deeper to get to that gas zone, you may go through the water table. Water will stop gas rising to the top, so you need to take the water off, you pump it off in order to create a gas flow. So that's the reason for the transition zone. You're sort of coming to the not necessarily the end of the gas zone, but you're coming to the point where it dips into the water. So you're getting a slightly different geology than what you get in the centre of the Hugoton, where several of these wells produce little to no water at all.
Right. Okay, that makes sense. And I mean, are we talking here? This is one huge gas field. I mean, or would areas would be trapped? So you've got a big deposit in one area, but it's sort of isolated. Or generally, is the helium, like water, going to find a way?
I suppose it's more of the latter than the former, but the geology does change. And I suppose the beauty of geology is you never quite know what you're going to get until you drill into the ground. And these wells, I mean, the multitude of red dots in the centre, these wells will have different producing statistics, different quantities of water, different quantities of gas. The content tends to remain fairly similar. We've found sort of up in our northern wells, in the two Carter wells, a higher proportion of helium up there. But where we are within the Hugoton, generally speaking, the content is pretty similar. Yeah, and that makes it fairly predictable. So when you're modelling the economics of a new well, you've got, well, as you can see, just a massive amount of data that you can look at to determine what would make sense from our point of view.
And interesting, you say that it would be headline news if you drill the well and it didn't get helium. So it's almost a no-brainer. It's not like you're looking for the next copper discovery or gold discovery. It's almost, like shooting rats in a barrel. I mean, what does that mean? I mean, does that mean it's less, economical, less upside there, or does it basically mean that you're effectively stable, for long time into the future?
It creates different dynamics. So if we were to pick a location in the centre of the Hugoton, I think we would be astonished, as with the local community, if it didn't produce something. But then the question is, well, what is that something? How much did it cost to drill the well in the first place? And is the flow rate going to be enough? Yeah, and our view on the centre of the Hugoton is, if we drill there, we'd be very, very unlucky not to get some production. But you then have to determine whether or not that production is going to be economic. One of the nice things about the Hugoton is the longevity of the wells. Wells in the Hugoton should last 30, 40, 50 years. I mean, probably well beyond my lifetime. Now, clearly, they will tail off as production continues. So, we need to measure that against what's the early production going to look like. People talk about payback. If it costs you $100 to drill, when do I get my $100 back? And 1 or 2 years, great. 10 or 11 years, not great. So people want to know they've got their money back, and then they want that tail of production. And where I think we'd be cautious about the centre of the Hugoton is, our expectation is you get your money back, but probably not in 1 to 2 years or 3 to 4 years. It would probably be a much longer payback. And it's rather like buying a pension or an annuity. If you drill in the centre of the Hugoton, over the course of the well's life, which I say could be more than 40 years, you'll get a very good return. But we're a small cap company listed on the London stock markets. People want a bit more excitement.
Yeah, exactly.
We're not necessarily going to get that in the centre of the Hugoton, but we're going to get a better result, we think, on the transition zone, where we've proved that once you take the water off, you're getting a much, much faster rate of production. And then we haven't really spoken about it yet, but our lease over in Dodge City, where the Rost well, over on the right-hand side of the chart, that's different altogether. Again, much higher pressure, much higher helium content.
We'll talk about Rost in a moment, because I know it's separate from the main Hugoton here. And this you sent me again before. So just explain what we're looking at here, and if you can, sort of geographically where this area sits on what we've just seen.
Okay, so the US oil and gas community divides the land up into sections, and 6 sections by 6 sections equals a township. So township is 36 square miles. We have farmed in, this is now with Scout Energy, we've farmed into 7 townships. If you prefer acres, the total acreage is just over 161,000 acres across these 7 townships. But you can see that each township is divided into 36 sections. Now, you would generally be limited to three producing wells per section. And so the red outline of the townships we've got, the green boxes show where there are less than 3 producing wells. We have a limit in our agreement with Scout as to how close we can be to one of their wells. So the less density of wells, the better for us in terms of choice of location. But where I think this chart is interesting is that the 6 boxes over to the left-hand side of the chart, that's the central part of the Hugoton. That's the interior Hugoton. This is where for 90 years people have been drilling very successfully. Over where it's labelled Haskell is the name of the county, by the way, and you've got that 7th box, which is almost entirely green. This is where the transition zone is. This is where Nilsson is. And you can see that over in the centre of the Hugoton, very few green boxes, a lot of red dots. There's been a lot of drilling. Over on the right-hand side, and that's an eastern transition zone, the red dots start to peter out, and there's a lot more green on the map. People have drilled a lot less there, and sensibly so. I mean, if we were talking 40 years ago, we wouldn't be having this conversation.
We'd be go for the low hanging fruit, the less risk. Yeah,
it's yeah. People sometimes talk about Hugoton being depleted. That's not the case at all. But certainly there is less pressure in the centre of the Hugoton, so you're going to get less of a flow rate. Over on the east, where we're getting higher pressure and therefore higher flow, once we take off that water, we think there is a better medium-term prospect over on the east, and that box which is labelled the county name Haskell gives just a good illustration of just how much opportunity there is to drill away from other people, where you're not being contaminated by the wells. In our agreement with Scout, we can't drill within 1,500 feet of one of their wells because they don't want you don't want two wells competing in the same zone, of course. But you can see there's far more opportunity over on that eastern side.
Yeah. So all the red is the Scout's area effectively that you've got that first right of refusal over, and that's right. Yeah.
Well, it's more that the red we've categorically got farmed in, so that's our land now to do with as we please.
Right. So Scouts won't do any more on it.
Scout won't do any more on that. In terms of Scout's other land, which essentially actually is pretty much everything you can see on this page, and beyond, we have a right of first refusal. And our point with Scout is, we think this deal's pretty good for us. If someone else comes along and wants something similar, we've asked Scout to show it to us first, and then we get the chance to step in and take it from someone else.
Excellent.
And that right of first refusal extends over 1 million acres. So again, the land mass is just absolutely vast, but sort of 7 or 8 times what you see on this chart outlined in red. That would be our right of first refusal.
Okay, that makes sense. And I mean, is it fair to say that the easy pickings have all been had, and now we're into more riskier areas? Because of course I understand what you say about the geology and the Rockies pulling the geology up, so you have to effectively drill deeper. I mean, how difficult is it if you hit that water table to then separate the water from the gas?
I would express it differently. I wouldn't say it's so much easy versus difficult. It's just a different process. If you drill in the centre of Hugoton, you'd maybe go 3,000 foot down. You'll produce gas, methane. You'll produce helium. You'll attach the gathering system and you'll sell it. But that payback might be a little bit longer. Over where we are, where we're focused on the transition zone, similar process. You're still drilling at a very similar well, but you're going to hit water. And you then have a slightly different or an additional task, which is what are you going to do with water? Sure, you're going to pump it off, but then that water has to go somewhere. And the two options are you can truck it to a site where it's disposed of, or you can drill a disposal well. And one of the nice things about operating in Kansas is the state accepts that water can be returned to the ground. And the two metrics very roughly are, if you drill a 3,000 foot disposal well, you can dispose of 500 barrels of water per day. If you drill a 4,000 foot well, you can dispose of 3,000 barrels per day. So if you're drilling wells in clusters, and as you can see from this chart, very often wells are drilled in clusters. If you have a disposal well near to that cluster, one disposal well could very easily cater for 2 or 3 or more wells. I mean, to give you an idea, Nilsen at its most productive in terms of water, was up to 200 barrels per day. It's now a fraction of that. But if you were to drill 2 Nilsens and have a 3,000 foot disposal well, that one disposal well would cover all the water cost. The other advantage of having a disposal well is other people can use it as well. I mean, we do have an understanding with Scout that if we were to drill a disposal well and they wanted to put some of their water in it, that would be fine. And there'd be a very small, as small as it's measured in cents, cents per barrel toll that would allow a third party to use that well. So disposal wells can be profitable in their own, or revenue generating in their own right.
So when it comes to working with water, then is it not too difficult? So the helium, the water won't stop the helium coming up. They'll both come up together, and you basically take off the water and then dispose of it.
Yes, the more so water sitting on top of gas will ultimately trap the gas, or will trap some of the gas. So the more water you take off, the better the gas flow rate will be to the surface. And what we've found at Nilsen, which is common to other wells around the world, is as you remove more water from the area, your gas flow rate increases. So you've got sort of two competing curves. As water production falls, gas production will start to rise. And what if I just stick with Nilsen, we found in the early weeks we were producing vast quantities of water, but it tailed off fairly quickly, and then became very, very manageable. And this was the theory we were seeking to prove, which is wells in the transition zone. So you can see where Nilsen is. Wells in the transition zone can be highly productive, and although conventional wisdom says don't go where it's wet, we've defied that conventional wisdom and proved that once you take off the water, you can get better production. And that Nilsen well, as I say, it is one of the best. You can see how many wells there are on the Hugoton. Nilsen is one of the best producing wells. One of the very best producing wells in the Hugoton. So taking off that, going to the trouble of taking off that water, on a medium term view, looks actually very, very smart. There's a quote that a guy gave me. Is someone I met back in November last year, and I was explaining to him what we've done with Nilsen. This is a guy who's worked in Kansas his whole life, and he says you may have rediscovered the gas field. And I've always sort of held on to those words because it encapsulates really what we've proved, which is the Hugoton doesn't stop where people have previously stopped drilling. The gas continues. But as you drill into that wet zone and remove the water, you create an entirely different way of extracting gas from the Hugoton field.
And is that Mendell's sort of MO, effectively? That's going to be your modus operandi. That's what you're going to be doing. Is looking into the transition zone, taking the water off, and getting into some of the best producing helium wells.
Exactly. I mean, you can see from this chart, we've got wells in a number of different areas, but like any small company, you experiment with a number of different strategies, and then you find the strategy that is most profitable. Yeah. And leaving Rost to one side, when you look at what we've got in the Hugoton or north of the Hugoton, Nilsen is the standout success. And so if we were going to drill any more wells, we'd want to be a lot more like Nilsen than the other wells. Now, all of the wells that you have been productive or are producing gas and helium, but you want to go where you're getting the best return. And Nilsen has proved itself to be the best return so far.
Okay. At the end of the day, if the economics work, it doesn't matter if there's more cost involved with taking the water off. If you can still make it pay, it doesn't really matter, does it? So.
And bear in mind, these are relatively shallow wells. On a sort of global oil and gas view, if you're drilling sort of 3,000, 4,000, 5,000 feet, these are not. These are not particularly challenging wells to drill. You've got beautifully flat land, nice weather conditions, a state that is very oil and gas friendly, good support networks in terms of staffing, in terms of spare parts. It's a great place to operate. So if your problem is water, that's probably sort of less in terms of problems that other people in oil and gas face elsewhere in the world.
Okay. Well, that covers, I think, pretty much the Hugoton area. So I just wanted to have a little bit of look at the Rost well area. So if we go back to the map here, we can see sort of Garden. This is a Hugoton area here, and we're down here now, aren't we? Around sort of Fort Dodge, this kind of area here.
Yes.
So this is not. This is yours. This is not to do with Scouts. This is M3's owned. So just tell us a little bit about this area to start with.
Yeah, well, so first of all, Dodge City. For anyone who's interested in westerns, this is Get Out of Dodge. This is the classic western town. Where we are in Fort Dodge, just over to the east. This is cattle country now. So you get an awful lot of cattle stations. Yeah, again with the obligatory amount of corn land that you get across Kansas. Where our Rost well is, this is an area that was previously drilled for oil and was unsuccessful, but the well log showed very interesting gas production, and that was what got us interested in Rost in the first place. Rost is a slightly deeper well than the Hugoton wells. It's about 5,000 feet. It is much higher helium composition, so it's been tested at 5.1% helium. It's also quite a wet well. There's water to be taken off. And what we've discovered actually in our analysis of Rost is two things really. There's good and bad news. The bad news is that there's more water than we first anticipated. The good news is there's more water than we first anticipated, meaning that actually the fact there is gas coming to surface, despite the amount of water in place, tells us that the pressure of the reservoir is much better than first thought. Okay. These photographs were taken by me back in the autumn of last year. that is on the top. That is the biggest pump we have, and I've always drawn to the Jaws quote. We need a bigger pump. That pump is we think not sufficient to make Rost productive. We'd be looking. This pump could probably do 300 to 400 barrels of water per day. We're looking for something at least twice that, if not 3 times that. We'd also need to drill a disposal well. You can see in the background of the photograph, beautifully flat land, and you can also see the telegraph poles that are running. Running the distance. One of the nice things about Rost is it's right off the main road. So that main road you saw on the previous maps are running east of Dodge City. That's right next to Rost. So communications and connections are absolutely fantastic. Rost is not in the gathering system, so the gathering system that's owned by Scout spreads out across southwest Kansas, but focused on the Hugoton. Rost is another sort of hour's drive to the east. So the smart move is to purify the helium whilst we're actually on site. And on that previous slide, that photograph on the bottom left is a PSA, a pressure swing absorption unit, which will purify the helium from 5%. Upwards of that, and we could take it up to 99% if we chose. Thereby meaning what we're trucking out of Rost it's got less waste product, and it is a more purified helium. I know it doesn't look like much, but there's about 4 miles of electrical cabling in that PSA. It's just about 20 yards from the well site. So that pump and that PSA, they're both sort of almost next to each other. And then you can see the telegraph poles in the background, so you can see how close we are to the main road. The financial illustrations we've got for Rost are that if we were to run that PSA at about a third of its capacity, so the PSA can deal with around about 750 MCF a day. If we run it to about a third of its capacity, we believe we can make in excess of $100,000 of revenue per month based on the helium composition and the pressure that we're getting out of Rost. Now, we do need to drill a disposal well. It would not be economic to pump off that level of water and truck it. So we're looking at some disused well sites nearby, which we can drill a disposal well. Same principles apply in terms of the level of water we can put into that well. Once we've done that and acquired a bigger pump, and we have located one, then Rost is in position to go into production. And we think the whole exercise will take around about 2 months. And this in the near term will be transformational for the company. The level of revenue that well can produce will cover all of our G&A and give us excess cash flow to continue developing probably other sites in that Fort Dodge area.
Okay, so and that's where the focus is at the moment, right now, for Mendel, getting Rost into production.
It is. I don't want to detract from what we've got in the Hugoton, but Rost is a very near-term, very understandable single well project that single well could completely change the shape of the company. If one well is producing 6 figures of revenue per month, for a company of our size, that's absolutely extraordinary. I say it covers all of our cost, and gives us that ability to go on and expand. And you saw from the chart with all the red dots on, there's nothing really happening around Dodge City. This is not an area that's been prospected for gas in the past. But here's the opportunity for us: prove that Rost is going to do what we think it's going to do, pick up more land and pick up more wells in that area, and the next step is Rost 2, Rost 3, Rost 4, and look to create more wells of that type. Again, that's not to detract what we're doing over in the Hugoton, but the opportunity at Rost, which it's a much smaller zone. I mean, you can see, again, the map illustrates it perfectly. The Hugoton is absolutely vast. Where we are over in Dodge City is much smaller, but 2 or 3 or 4 or 5 wells of that type, create a pretty exciting company.
So what's your strategy with the Rost area then, as you say, getting that into production and then looking at getting other bits of land and other wells, Rost 2, 3, 4, potentially 5, versus the whole of the Hugoton area? How are you? What's your approach to both of these as a business?
They're 2 quite different prospects. I often say, Rost is the sort of the sex and violence in the company. Rost is a well that can come into production quickly, should produce quite fast, should produce a considerable amount of helium and therefore cash flow for us. but we don't have the data to demonstrate these wells will have a long life in the way that we do have data in the Hugoton to say these wells can be 30, 40, 50 years. So the near-term future for the company is the high cash flow, high helium content in the Fort Dodge area. I think the company over decades will be proven by a large number of wells in the Hugoton that won't necessarily have the sort of the fireworks that the Rost well will have, but actually if you're a Nilsson well doing 124 MCF a day, that's pretty good. Times that by 10, by 20, by 100, and this is the scale of the Hugoton. That transition zone is 2,000 square miles. If we run it from Kansas all the way down to Texas, that transition zone we're interested in is 2,000 square miles. So we're not going to run out of opportunities or sites to look at to drill transition zone wells. But in the near term, it's a case of economics. In the near term, you go where the cash flow is most available. That's in Rost, in Fort Dodge. But that's not to say that the Hugoton is not an extremely interesting area for the long-term future of the company.
So Rost gets you going effectively with higher cash flow that you can then look to, drill over in new wells in Hugoton, and then of course look to expand Rost. When it comes to, are you taking a bit of a risk here? Is it not safer to go with the safe, tried and tested Hugoton rather than Rost? You obviously feel confident about what you'll get from Rost.
I think if you're in the natural resources space, every well you drill, every hole you drill in the mining space, there's always a risk. You can do all the modelling you like, until you go under the ground, you don't really know what you're going to find. But we're not taking these decisions lightly. The Rost well is drilled. Rost has already flowed gas. We know it's there. We've tested the gas. The task now is to take off the water and prove how much gas is going to rise to the surface. So I would sort of equate the risk as being sort of equal to both. You don't know how much water you're going to find in the transition zone. You don't know how much gas you're going to find, but you'll do your modelling. You'll make an educated assessment of what can be achieved. And I think where maybe we differ from others is the Nilsson well exists. We've already proven that strategy. We've done a big frac in a water or in a wet gas zone, and we've proved we can take the water off and we can produce a higher quantity of gas. Rost, that well is drilled. It's already flowed gas to the surface and a very high helium content. It's a proven concept. Now we take the water off and we prove how much gas is going to flow out. So everything's a risk, but these are managed risks working on proven quantities that are already baked into the story. So investors coming at this point, obviously we raised money a week or so back. Investors coming at this point can see what we've done with Nilsson. Call Nilsson a pilot well, in terms of what's possible on the transition zone in the Hugoton. Call Rost, if you like, it's probably more than a pilot well, but the first well in a much smaller reservoir, we believe, but in a much higher pressure zone where the helium content is absolutely terrific. It's almost 10 times the helium content that we're seeing in the Hugoton.
And you've got everything you need now to get Rost going in terms of capital and logistics, everything else that needs to go into place.
Yeah, we do. The fundraise we announced last week had two main uses of funds. The first is Rost. That is the primary focus. The second is we would like to list on AIM. And much as it pains me to say it, I used to be a professional advisor. There is a considerable amount of cost in arranging that AIM listing. The fundraising last week covers that cost. So we are good to go on Rost. We're good to go on AIM. Again, I'm not saying we're not interested in Hugoton anymore. We absolutely are. But in terms of the near term, get Rost in production. That will generate significant revenue and should generate very significant opportunities elsewhere. List on AIM, which is what investors are telling us they'd like us to do. And we should be looking like a very different company in a few months' time.
Excellent. Okay, good. So a few months' time, you should get that Rost into production. We should start to see some figures coming in. And then, are you thinking ahead already? Are you identifying potential sites in Hugoton, and what sort of factors are you using to determine that? Because it's going back to, you've got a lot of choice, really, haven't you, there, if you're going for the Haskell region?
Well, we've done both, actually. We're looking at other areas around Fort Dodge.
Right.
If Rost performs as we expect it to, other people showed interest. And we're a small company on the London market, but we're actually quite high profile in Kansas. That Nilsen well, because of its level of its production, got a lot of people talking, a lot of people talking to us. Rost, because of its potential helium content, has generated a huge amount of interest from prospective off-takers and people wanting to work with us. So our profile between the UK market and Kansas are really quite different. Here in the UK market, we sit as a small company. In Kansas, we're kind of the new kids on the block. People want to get to know us. And we know that if Ross goes as we expect it to, other people will quite naturally start looking at that area. So it's important that before Ross comes into production, we've already got an idea of what the second, third, fourth, and fifth wells in the area will look like. Absolutely the same applies to the Hugoton. We think what we've proved with Nilsen is something really quite extraordinary. Back to my sort of little quote earlier about you've rediscovered the gas field. This is all public data. People can see what Nilsen is doing, and we need to make sure we've also picked up some sites through that farm out we have with Scout, picked up some sites that we can drill more Nilsen wells. The next stage, I think, is to work with counterparties. The US has got a very established system where people will buy into other wells. So we did a little bit of that with Nilsen, where we put on a bigger frac at the tail end of last year. That was funded by private investors at the well level, not at the company level. So it's very possible to drill more wells where we're not funding 100% of that well. One of the conversations we had, we would fund none of the well, but we would simply retain an override on the well's production. So there is an opportunity to roll out more wells without having to come back to markets and raise money from investors, but actually do that at the well level. And land grab probably be slightly overemphasizing it, but there's an element of if we've proven two interesting concepts on Rost and Nilsen, we want to do more of that, and we want to make sure we've got more sites identified and drill ready for when we're ready to go next.
And just another thought that occurred to me here, just on your agreement with Scouts. I know your pricing is pretty good with them. You've locked in a price there because they're going to buy your helium through their gathering network, and their price is I think better than the current helium price, if I remember correctly. Yeah, so you've got quite a good pricing deal with them.
Yes.
But also, I mean, to take that quote, you say you rediscovered the gas field, and you've talked about almost a land grab. Why are Scouts not doing this themselves if they're such a huge operator in this area, leaving it to little old Mendel?
Well, Scout are a private equity fund masquerading as an oil and gas company. I mean, if you go to Scout's office, it is an oil and gas company. When I sign a document with Scout, there's my signature, and then there's about 2 or 3 pages of their signatures, because all the different funds that are part of the arrangement all signed separately. Like most private equity funds, Scout are very risk adverse, and they have an amazing asset called the Jayhawk processing plant, which we know is not working to full capacity. It's an enormous plant. It's a mile across. I mean, to walk from one end of it to the next is 20 minutes. So Scout are hungry for production. And so if a company like us comes along and says, look, we've got a new idea here, and our idea is we can drill in the transition zone on your land, but we will feed the production to you, this is actually pretty interesting to Scout. And so long as we're not doing anything to contaminate their wells, as long as we're not getting too close to their wells, we've got a very captive audience in Scout. Equally, we're also attracting interest from other people, and the single best place to send our gas, our helium gas, in the Hugoton is to Scout. Attaching to that processing, that gathering system, and going straight to the processing facility, it's dead easy. It's a pipe from the wellhead to the gathering system. Yes, you mow down a bit of corn, you put in a meter, and the gas goes to the processing system. We get paid. In Rost, where it's being trucked out, there's a bit more option. Again, Scout start as the very strong favourite, and you're right, they're offering as a helium price that is actually higher. It's quite a bit higher, in fact, than the price we modelled at. You're going back to where this conversation started. The helium market is very immature, and whereas with gold, I have another company I'm interested in gold. You can look at the price on the screen, and that's pretty much the price you'll get paid. That is not true of helium. There is a spot price. People can sort of look on the internet or look on Reuters, and they'll find the spot price for helium. That at very best is indicative. Around about 1% of the world's helium gets sold at the spot price. 99% gets negotiated between producer and an off-taker. So location matters, infrastructure matters. Being able to purify on site and truck it out, or better still, being able to put it into a gathering system is absolutely critical. And that's really our model. Our model is not to drill the sort of beautiful holiday destinations around the world where I'm sure the helium content is fantastic. Our model is more logistics focused and making sure we can get the helium to market very efficiently. But Rost will be an interesting opportunity for us. We're outside of the gathering system. We have competing interests of people interested in taking that helium from us. Scout are obviously the very, very strong favourite, given our existing relationship with them. But we're attracting interest, and it's nice to be at a party where people want to dance with you. People are interested in what M3 and Mendel are doing.
Indeed. And just a final thought, Nick. I mean, if you were to sort of spell out or make the investment cases why people should perhaps consider, holding shares in a company like Mendel. I noticed this slide from your deck here where you've got different helium plays on the market effectively, and Mendel is definitely the cheapest. Maybe that's because of the Aquas listing, so that might change with more liquidity moving over to AIM there. But yeah, if you were to make your 30-second pitch, what would it be?
Well, my 30-second pitch is if you're in natural resources, whether it's helium or something else, your objective should be to take it out of the ground and sell it. And of all the helium companies listed in London on different stock exchanges, we are the only one extracting helium and selling it by the day. Those wells you saw on the previous charts, they are producing helium, and we're selling it every day to Scout. We have an offtake agreement for 100% of what we produce. So that Jayhawk facility is hungry for production, so they will take whatever we can produce. I imagine every company can produce a chart where they have lots of ticks under their name and lots of crosses under their competitor's name. We all do that. But my starting point is, as with every resources company, you want to turn your resource into money. And you do that by selling your resource. And we are further advanced than any of the other London companies. And again, I'm not knocking their business model at all. Some of them have got some very, very interesting prospects. But in the near term, we are selling our helium. And through Nilsen in the Hugoton, through Rost and Fort Dodge, we've got opportunities that I think rival really any of the other companies. And as those opportunities mature, and therefore we sell more helium, you should expect to see far greater revenue production from Mendel. And I look very jealously at our competitors. Their valuations are absolutely terrific. Ours, maybe it reflects the market, maybe it reflects the fact that we need to build our profile. But in terms of what we're offering versus our market value, I think there's a real opportunity here for this business to grow very significantly in the near term.
Excellent. Well, thank you, Nick. And I guess you can't talk about projections or numbers; it's market sensitive. But you did mention the Roswell could do over $100,000 in revenue per month. That was one thing that was public, I think.
Yeah, I mean, these are. I'm always quite cautious about sort of putting numbers out there, but there's fairly simple arithmetic that investors can do themselves. The PSA, so the pressure swing absorption unit on Rost, can handle 750 MCF a day. Now, generally, you don't drive your car at 90 miles an hour 24/7. You might sort of rev it from time to time, but you'll give it a rest. And the same with the PSA. We don't want to run it at 750 per day all day. So let's assume we run it at 250 MCF per day. Let's assume that helium is available at people do their own numbers. $300, $350, $400. People put their own numbers in. 5.1% of what we take out of the ground is valuable. The balance is not valuable. Let's just leave Bitcoin out for the moment. Investors can do their own calculations on how much helium is going to come out if you're producing 250 MCF a day. Factor in a price, and that's your revenue. The cost of running a Rost well is not significant. There's not a lot of OPEX. I mean, the pump will need maintenance if it's producing that much water. It will need maintenance from time to time. But this is more about a CapEx process. Get a bigger pump, get a disposal well, and this is a project that should be capable of producing very decent revenue fairly quickly once that process is complete.
And that's Rost, and there's also production elsewhere, isn't there?
And there's production in the Hugoton. So Nilsen, different profile. That's 124 MCF a day. Again, investors can do their own calculation. That's 0.6% helium or 0.63% helium. Totally different delivery profile. That is a the pipe, connects with the wellhead, go to the gathering systems. There's no need for purification. There's no need for trucks. We send the contents of the gas down the pipe. A meter demonstrates how much content has flowed through, and we get paid at the end of the month. We can earn money from helium, methane, and NGLs in the Hugoton. The composition in Rost is different. The methane is much, much smaller. There's no NGLs, so it's predominantly a helium opportunity. But we have said, rather than dispose of the methane, can we use it for something else? Yeah. And very topically, look, can we build a generator and put a server on site and mine Bitcoin? And it's something we've been looking into. It's not going to massively change the economics of Rost. I mean, Rost is about helium, but if you have a waste product that's got a value, it would be remiss of us not to be looking at how we can use that waste product to generate something for investors.
Absolutely. And would you as a company look to put out production numbers on maybe not a monthly, but a quarterly update once, certainly you've got one producing now in the Hugoton and then Rost coming online in, you said, a few months. So let's say maybe, I think it's throughout the summer actually, wasn't it, that you were actually going to get, So would you look to sort of keep the market updated with the flow numbers? Yeah. Mm-hmm.
No, absolutely. And, we will, just as we did with Nielsen, we will learn with Rost what the optimum production level is. And I've given you a sort of a 1/3 of the PSA as a place to start. We think Rost can produce far more than that. But again, back to my car analogy, you don't drive your car at 90 miles an hour all day, every day. You make sure you don't wear out the engine and wear out the parts. So we don't want to go totally crazy on Rost and find that we're sort of replacing the pump or damaging the pump on a sort of weekly basis. Let's start sensibly. And sensibly, still looks like more than $100,000 a month. If that's sensible, I'm pretty happy with that.
Well, thank you very much, Nick. Very detailed dive into all the projects there in helium. Thank you very much for your time. Of course, Nick Tulloch, CEO of Mendel Helium.
Terrific. Thanks so much, Mark.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.